Can you believe April's almost over? I mean, that is nuts. Just crazy. We're already in spring and it's about to be May. So that it means 1/3 of the year is almost over. I just crazy stuff. But we got a good one this week. I really believe it. Let's go. Let's hit it. Let's see what we got. Rates, high sixes, right? Not quite sevens like we saw just a minute ago, but you guys can see remember, down is bad. Like green is good. The higher this thing goes, the lower mortgage rates. And you can see today's a good day, but we've had some really rough week or so, give or take. And you can see the big move when tariffs went on about into March, right? And tariffs were in place. Everybody thought the world was ending. The stock market went down 10%. All of a sudden, early April, president says, hey, just kidding, put a 90-day pause. And all of a sudden, money came out of our world, right? When there's uncertainty, money comes into it. And all of a sudden, tariffs aren't happening after all, at least pushing pause. And things got really good for the stock market, really bad for us. And since then, we've kind of settled somewhere in the middle. So if you look, we got some formidable resistance levels above us. We got the 200-day moving average, that's that blue line. We got the black line, that's the 50-day moving average. And then that 25-day moving average, that's that brown line. So we got three things ahead of us that was going to stop rates from getting better. So at this moment, I don't see rates getting better in the coming days before I do this again next week. I think we're going to be sitting in that high six range. Time will tell. We'll see if I'm right. But as long as we stay above this purple line, that's the 100-day moving average, that would sure be nice. So if we can break above those three things and stay there in the coming weeks and months ahead, that could be really good. But for right now, we got a pretty formidable opponent. I won't bore you with this. Biggest thing I just want to point out is just the inventory. Median home prices, it's about 404, call it that, 404,000, give or take. At the end of the day, home sales for March, their headline said it was down. Look, at the end of the day, there were a lot of fires going on out in California. So that's going to impact things, certainly. Rates were okay back then, so that's not a big deal. But inventory is 1.33 million units. And they, all this noise of like, oh, this months of supplies, it's up, or days on the market, it's up. Look, at the end of the day, we're still at 4 months overall, right? A normal market's 4.6. But check out this graph. This is existing homes for sale. So while there's a 1.33 million homes for sale, if you look, guys, where we're at right now, I mean, that is stinking low for the last 2.5 decades, almost 3 decades here. I don't know if this goes back to 1995 or not, but check it out. And if you look, I would say take away the 05 to, the mortgage meltdown bust, right? That bubble. Take that out. I'd say 2 million is kind of a normal, healthy homes for sale. So yes, there's still a housing shortage as far as homes for sale, which means there's no bubble. So with people still needing to buy and people getting older and kids graduating from college and people getting divorced and all that stuff, like there's still needs for housing and we're just not keeping up. So I don't see any bubble coming. Shares of homes for sale with a price cut. You can see going back to what is that? Almost, not quite, but let's say 8 years. So not quite 10, but you got 8 years in there. About a third of the homes these days have homes for sale with a price cut. The part I want to remind everybody, builders are a big part of what's moving and selling homes right now. A huge part of the consensus of what's being sold are people that have a 3% rate. They're not selling. The builders who need to sell homes for a living, they are selling the concessions. So the 1 out of 3 does not surprise me. The fact that it's up does not surprise me. Again, the last 2 years, give or take, the builders have been selling homes because they can offer those incentives which drive down the interest rates. So again, I don't see this as a sign of a bubble. I just see it as a sign of where we are in this type of market. What I did find interesting about this slide, check out the purchase applications. Look how sensitive it is. When rates dipped a couple weeks back, early April, look at how many more mortgage applications came in over just that few day window. And then all of a sudden, back to where we were, and obviously, and truthfully, a little less than where we were. The good news, encouraging part, if you're in the industry with me, at least we're higher in loan applications this year than we were this time last year. So at least 2025 is winning and ahead of 2024. We shall see if it stays that way. I also found this very interesting. Average cost apparently hit about $4,600 on a purchase loan last year. I would have guessed $4,000. I'm in Texas, so I think our fees are a little bit lower than others. But I would have said overall, and you can see we're at 3,700. I would have probably said I would truthfully, if you'd asked for us, like our company, what that is, I'd have said closer to that 3,500 number. But it looks like at Texas is 37. But I will say like 4,600 Like, not ideal. All right. I remember wasn't too long ago when there was like 2,800. I bet that was in the last 5 years or so. So anyway, it's about a little over 1% of the home's price is kind of what that equates to. In Delaware, you poor fellas and gals, you guys got the highest cost at about 3%. South Dakota, apparently it's damn near free to get a house. So there you go. Financial Times says Fannie Mae and Freddie Mac make up for close to 50% of the market. I did not know banks and credit unions, although it makes sense because banks are going to go under like maybe Chase and Bank America crap like that. So 26%, the rest of them. Ginnie Mae, for those that don't know, that's your govies, your Fannie Mae, or pardon me, your FHA, your VA, your USDA. That's what Ginnie is. But I just thought that was neat as far as the mortgage makeup. And the program of the week, I've unfortunately had to send a couple deals to a buddy of mine that works at a bank that is really good at bridge loans. Yes, we offer them. So call the Mortgage Mark team. But the reality is, I'll probably be sending it to a buddy just because I got a really, really, really good program. But bridge loans is for those individuals that want to buy their new home before they sell their current one. It is a thing. We can help you. Like I said, we'll point you in the right direction. We do not get paid for it, but we just want to make sure you are taken care of. So if you know somebody that is having trouble, have them call me. We can get them a true bridge loan. This isn't just a HELOC that we're going to call a bridge loan. It's a real thing. And some fun. So I know I'm 2 weeks late on this. I saw the graph, just forgot to include it, but this was the private jets leaving Augusta, Georgia, right after the Masters on Sunday. So I just thought this was interesting. Somebody out there is tracking the 229 private jets that left on Sunday after the Masters. 2,100 private flights in and out during that week. Airport averaged 300 flights per day, up from its usual 60. So that is a 5x the number of people going to Georgia. And what I found most interesting about the graphic, look how many east and south. Like there's just, who knew the West Coast? They barely even know that it exists. And I don't know, it surprised me. So apparently it's a very Southern and East Coast thing. So I thought it was more nationally, but apparently not. And if you want to buy a $25 million house in Dallas, I don't know that I can help you with the financing of 100%, but we could certainly look to see if we can help you. But this was pretty sweet. I just want to know, how much money do you need to make? You think I would know this? I hadn't done the math to afford a $25 million home just from a carry cost. I mean, this is spectacular. If you don't want to Google it, 16,000 square feet. It's on the 40. It's crazy. Good for them. And then our meme of the week, and this is so true, and I hope the clients aren't watching this one right now, but we got two folks that are telling us that we're not doing our jobs, when in fact, they're calling us, asking how their mortgage pre-approval is coming along, and we haven't seen any documentation. One of them is a closing that's coming very quickly, and they haven't gotten us stuff. So I hate that they're yelling at us, thinking that we're not doing our jobs, but we're yelling right back daily, saying you owe us paperwork. So I thought that was funny. Lastly, some testimonies we got this week. We're sharing them as a reminder, saying, hey, the Mortgage Mark team's great, and I agree with these people, so good for them. But we're reminding you that if you want to get social with us, right? Follow, share, subscribe to all this stuff, say some kind words. We'll take it. We'd love it. We appreciate you as always. Enjoy the rest of your week and stay dry. It's kind of wet where we are. So enjoy the day. We'll see you next week.